What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide daily memos as well at Hemi137 on X, and I do provide current events. And we also do have a blog now, essentially giving highlights of these videos as well as the current events. So if that's again sounds like something you're interested in, consider subscribing and also drop a like to get this thing started off right. So it has been a very busy week, and this week I expect a lot of information again this week. We were waiting essentially for the end of this week to kind of have a direction, but it looks like we've already kind of started that direction as we start getting into this. And I think this week we'll build the nail in the coffin, and then from that point, we will have a direction till the end of the year. Again, just my opinion, and as we get into it, you kind of see what I'm like talking about and explaining here, as there's again a lot of information coming on. I said the first couple weeks going into earnings is going to give you all the information you need before the market starts making a decision. And again, we've had a lot of information thus far. So to look at the weekly recap, again, we've had a lot of big earnings over the past week. You had Microsoft, Google, Meta, Amazon. Again, all of them are essentially, except Google. Google missed cloud. Meta, again, a lot of them aren't doing as hot. The Microsoft did well, but again, they came out after hours and essentially said that AI isn't where people are expecting it to be, which is something we were aware of. And now that realization is sinking in. So essentially, that keyword that has been pumping the big seven, the market in general, the market index in general, up over the past couple months, is now starting to get deflated. If you haven't noticed over the past about 3 or 4 weeks, maybe about a month, things have started to shift, and people are realizing that these expectations were real too high, and big tech is starting to correct. And this is where this is really important, because not only at the same time when essentially we came into that last monetary policy, and then we haven't raised again, and considering that this week we have another monetary policy, again, not expecting another raise, which leads us to believe that we are in a pause. And during a pause, the market will start to correct and start pricing in a recession. But ultimately, until we start getting cuts, which is going to be a very delicate situation that we're currently in, we have to understand that with the rate cuts is going to be essentially when things are extremely bad. The market will start already pricing in a lot of the stuff which we're starting to see and continuing to see since that last monetary policy, and ultimately understand that we want this thing to extend out as far as possible. We need a big event to happen, and behind closed doors, and we're seeing with these earnings is there's a lot of problems that are occurring. And again, we've talked about the conversation with the banks has been going on since like last November, that essentially it was overheard that CEOs of these banks were saying the public doesn't need to know what's going on with the banks because it would draw panic and people would pull their money out of the banks. And then SVB happened, and then it's just been a banking crisis ever since. And we've essentially been walking on eggshells, only to find out that JPM is also $40 billion unrealized losses as well, even despite their big win, quote unquote, with expectations, because all 82% of the companies out there are beating expectations, which is absolutely absurd, just to try to use specific tactics to keep the market up. And we are seeing that. But with all that being said, the earnings, again, they're so low that if they beat, they beat. And it's another tactic used to prop up the market. And so we're kind of seeing that with what's going on with Amazon and Microsoft. Yes, they are doing very well in some cases, right? I've talked about this ecosystem and what they've developed so that they could harden themselves. They all did stock splits. The big seven did stock splits before coming into this year. So just be mindful of that. So they've all kind of tried to set up to be resilient during this period of time, which again is going to last over the next couple of years, right? It really depends on how the Fed continue to play this out. If they're really aiming for that 2% target, we're seeing inflation creep back up. So it's almost double that 2% target, what they were aiming for. And so this is going to, again, really determine, because we are getting mixed signals. And we can see that with, let me hit GDP here first, because the GDP came out here on Thursday. It was at 4.9 from 4.3 expected. But one thing you have to consider and understand, which had a lot of people scratching their head, was essentially the fact that we are giving Ukraine billions of dollars. And then we just got another 600 billion, I believe, is a loan, which is helping us essentially manipulate the GDP. And rightfully so, because we don't want to show weakness when we are essentially almost getting into a global conflict with Russia and China, and something that we've seen with Nvidia over the last earnings. And so we're seeing a lot of heavily manipulation, a lot of tactics that are going on to keep the market propped up. Now, being said, it hasn't been enough. I think the market is starting to become numb to it again, because over the past month, we've started to really sell off. The market's not even believing what the Fed or the administration are saying, and it's selling off. And again, with a potential pause, people are starting to believe that there's more of a recession coming. And so in that aspect, I think the market is now starting breaking some critical levels, is now starting to look like it is going to price in a recession. Will we make a new bottom is the question. We don't quite know right now. But what also happened this week is we've had Bitcoin. We've talked about Bitcoin. We've talked about the manipulation in Bitcoin. I've actually created a separate video over the past week about this, talking about this specifically because of the spot ETF that's coming up, and essentially the hundreds of billions of dollars that essentially they're going to come into Bitcoin once that officially gets approved. But you have places like ARK Invest, you have places like BlackRock, who've essentially over the past week have highlighted the fact that they have a Bitcoin spot ETF added to their list of ETFs. It's something that's been on BlackRock's ETF list for quite a while. It's just been recycled news, which you've noticed if you watch the markets at all, there's always recycled news to try to see if it can stir up a pump. And it obviously over this past week, it stirred up a big pump on Bitcoin and pumped it to 35K. Now, when I made that video, I talked about that 35K mark. And if there isn't more news or some other information that's not pumped over these next couple of days, it's going to be important, because if Bitcoin cannot break over 35K, it is going to start coming down again. And rightfully so, because the rest of the market's getting ready to have its potentially big leg down, because now we have the one stock we've been waiting for, which is Apple, and holds the largest weight on the index, which is sitting around 7%. And they've had bad quarter after bad quarter. And now we have them on Thursday. And so I think the whole markets in general, Bitcoin and everything, is waiting on what Apple earnings are going to be. Again, now they've been pumping really hard about their iPhone. I don't know if it's going to be enough to save them. Maybe it will, maybe they won't, but we still have to realize that China is essentially, again, banned iPhones from any government facility, and we're trying to expand that out to other businesses as well. So those are things you have to keep in mind, and what they're trying to do with the manipulation on that side of it. And you have to understand the tactics that China and Russia are using against the U.S., as well as that we are, to potentially prop up our GDP and everything else that's going on. So there's a lot of manipulation going on, not just trying to confuse the consumer in the U.S., but also to confuse those other foreign states that we are looking to potentially have conflict with, or have conflict with, but potentially increased risk of a potential another war, right? And so, being said, a lot of information just on that. Then we did have the core PCE, which came in at 3.7 versus 3.7 expected. Again, it's creeping back up to double what we want it to be. And that is not a good sign, because if it starts creeping back over 4, you're going to start drawing panic. And we don't want to get in hyperinflation. Right now, we are in a fragile state. If we take off the reins from interest rates and start cutting rates now, it's going to be a huge problem, because then you run the risk of hyperinflation, which means that, yes, the markets will go screaming up and tearing up out of here. But guess what it's going to do? It's going to absolutely obliterate the middle class, because at this point, if we start getting into hyperinflation, people are already overextended just trying to live. Imagine if prices never came down and just kept running. That's what's about ready to happen. And that's what the big concern is if nothing crashes, which there is a lot of commotion about things getting very close to crashing, especially when it comes to any kind of business loans or any kind of commercial real estate or anything like that. They've actually started working on 15-minute cities for commercial real estate because businesses don't want to come in. So now they're trying to essentially, the government actually funded, I think, a fund to start building out housing in these buildings to try to essentially solve for this commercial real estate problem that they're having. And so, which is something that's been talked about. I haven't talked about 15-minute cities too often on here, but it's probably something we're going to have to start shifting focus onto, but then potentially next play for the federal government. So with all that being said, mortgage applications are now down 50% since the beginning of 2023. It's the lowest since 1994. Again, unaffordability cannot be matched. And again, the GDP is throwing funny numbers. The non-farms are throwing funny numbers because people are working 2 different jobs to stay afloat. And also GDP is being heavily manipulated by all the money that we're essentially kicking out to Ukraine and all these other global conflicts that are currently going on and continuing to go on. And this is why Yellen said that, we have enough money. They do have enough money because essentially been siphoning out billions upon billions of dollars at a historical rate. You have to understand with these rate increases, yes, it helps the banks, but that money gets funneled right back essentially into the treasury, so the treasury can fund these things because they've been essentially the money they've been receiving from the banks from these interest rates is essentially what's fueling that. So you have to understand that because they pumped all that out, now they're siphoning all that back out, and then now they're at a historical rate of essentially increasing the treasury funds at such a rapid pace that they can fund all these ventures out for war because of the fact of the resources that we are now looking at, especially now that we're pinpointing Iran again, resources, quote unquote, and oil, and something we've talked about all the time, and something I've talked about recently is anytime there's any kind of global conflict in which any country wants to come off the petrodollar, we always get into a global conflict with them, and somehow, some way, we remain on essentially the petrodollar, and because the dollar isn't backed by gold anymore, so now it is the petrodollar that is the almighty in what we fight for as of right now. So whether you want to believe that or not, that is the current case. And I do believe over the next decade it's going to be a huge problem. There will be a big shift, but people aren't just going to get off the dollar. They can't just get off the global dollar, and that's also why we are looking at potentially another war here, and also understand that because of that, this is what's going to carry us essentially into that next transition. What will that be? We don't know. Is it going to be crypto? It could be, but we don't know. We're trying to the Fed and what's going on with the administration. They are trying to play this out, and this is why the spot Bitcoin ETF is very important, because if all banks get approved for Bitcoin, then they will make the law. We've talked about this on Tag Team Crypto. If you don't know about that, it's a space we hold every Tuesday night at 9:30 Eastern Standard Time, and we talk not just about like crypto, but we talked about just macroeconomics. And this is something we've talked about there for over a year on how this is happening and how this is playing out, because it's playing verbatim and how we talked about it over a year ago. And essentially that process of how banks will essentially hold the Bitcoin, you can trade it. You won't actually be able to own any Bitcoin unless you're certified to be able to do so, which eliminates a lot of people because they want to be able to have the control. If they aren't the middleman, there will be no control, and they need to have control. And so this is why there's been such a delay in crypto, and we're seeing that again. I think the spot ETF at some point between now and next March, I think there will be a crash, and we're starting to price that in now. And then institutions could buy enough, which they said over this past week with all the manipulation on Bitcoin, that they're in the process of accumulation right now. This is why they are essentially listed it on their sites, and it would make sense because if we have a huge pullback right now that we're starting to see, they could start buying everything up, and then once they have enough, once the institutions have enough, then they can essentially approve the spot ETF. And then at that point, you're going to see a lot more regulation. You're going to see a lot more of these other things that are going on. This is why there's been such a big delay in crypto and everything, and CBDCs and all that, because of what's currently going on. So again, there's a lot of things going on over the past week, and I said this would happen. We will get waves of information, because what they like to do is, if they can throw waves of information, they can throw out very important information that people are going to miss, that is going to have a big effect on the economy. And that's the only way they're going to be able to get it out there and try to hide what's actually going on, because we've seen the revisions. Non-farms have been absolutely horrible, especially the revisions. It's been declining really rapidly. That full-time jobs are just, we're losing tons of full-time jobs. Yeah, we're getting tons of part-time jobs. So people are working, 3 to 4 part-time jobs just to try to make ends meet. This isn't talking about going and reinvesting in anything. Something I did briefly start touching on was the fact that maybe people are out there going and buying other assets because they're concerned about what's happening with the dollar domination, and what could be potentially shifting off of that. So people may be buying gold, people may be buying other assets, housing, or whatever the case is, so that they have a physical asset, because if their currency is changed, they at least have something to exchange it for, whether that's gold, silver, whatever the case is. They want that tangible asset that they can actually exchange for whatever the current currency is. And so that's what you're currently dealing with as of right now. And this always happens no matter what kind of conflict we're in, but we are in a very critical state right now, given everything that's added up to this point, right? Everything in the past these are all the same cycles, but again, you have to understand that you've increased. We go back to the increase, 40% of the money supply, 40% of the money supply over all the decades. We've printed 40% of it just a couple years ago. And we're seeing the ramifications. We haven't actually completely seen what's going to happen just yet, but you've seen the Fed historically increase rates at a rapid pace, essentially because the Treasury was days away from losing or without having any money, and then the interest rates kicked in, and now they're rapidly building up the Treasury because of these high interest rates at a historical pace. And so this is what you're seeing. And so yes, they can fund a bunch of military operations now, because they couldn't do that a couple of months ago, because they were facing bankruptcy themselves, right? They were talking about, that $1 trillion coin that Yellen could essentially print, which is, again, just packaging it up and re-leveraging what more debt is all of that would be, essentially. So, but with that being said, that is just what's gone on over the past week. This upcoming week, we got a lot of earnings this next week. Not only that, we have the interest rate decision. Again, I'm not expecting anything from that. What I'm expecting from the interest rate decision is we're going to continue to remain paused. They're going to still talk about a 25-point basis move, potentially in the back pocket. It really depends on inflation, what happens. I don't think it's going to happen at this one. Potentially at the next one. We only got 2 more before the end of the year. This one on Wednesday, and then another one in December, and then that's it for the year. I don't think it's going to happen this year. Maybe early next year. We have to see how inflation goes, but I don't see them increasing rates. I think we're officially paused as of right now. I do believe that they will extend it out, hopefully long enough to where we don't get into hyperinflation. But again, all that is very dependent on what the Fed do. The Fed have ultimate control. And so also we will have Powell fielding questions shortly after, which will be more important than the actual interest rate decision. Will be what he says on Wednesday at 2:30 Eastern Standard Time. So you need to be tuning into that. I've always said about that. He's been on a lot lately, but whenever he speaks, you need to be aware of when he's speaking, because he could drop information that could dramatically change the market very, very quickly. And we've seen that every time he's on there fielding questions. So again, Wednesday, he will be fielding questions. Friday, we do have non-farms. Again, going to be extremely important to watch to see if that goes up or down. If we start getting, again, crazy, this soft landing, essentially BS story that we're getting, don't believe it, right? People are working multiple jobs. I've met a lot of people that are saying they're working multiple jobs just to make ends meet. That's your average American, right? And they're saying that even the 1% of people that are currently making over 100K are still aren't living paycheck to paycheck, are concerned about paying over the next couple months, because we also have to remember that over the past month we've had student loans roll back and everything. And so we have to understand that this is all starting to play out. Now, once you start getting more months accumulated, as long as these interest rates are high, will be the next thing. We wait to the next earning, what's about to fail. We'll wait to the next earning, what's about to fail. And then we will start seeing this, and we'll get that event that's going to cause the Fed to start cutting. Hopefully it's not too long, because again, something needs to get crushed for that demand to come down. And we haven't seen it quite yet. We've heard a lot of rumbles. We got a lot of striking going on. Again, that's a bad idea. You don't want people striking. I understand it's hard to make ends meet, but we get these approvals for all these strikes. You're not going to kill demand, and then guess what's going to happen? You're going to get hyperinflation. Yes, you're going to have the monster of all rips in the stock market up 600% in a year, but guess what else is going to happen? All those people that are having trouble to make ends meet, it's going to make it more unaffordable. There's going to be absolutely no middle class. It's going to be the rich or you're poor, and that's what's going to happen in hyperinflation. Look at Venezuela, right? That's the last thing we want to happen. But we are starting to see disinflation. We're starting to see some kill on demand, but we want to see it even more so. And again, another reason why this timing of how this is all going to play out, again, it's hard to judge, and we don't know what event's going to cause essentially the disinflation to the point to where they may start quantitative easing, and then realize that is the ticking time bomb where we price in a recession. And then we're going to have a big boom cycle out of this, because this could be potentially our last boom cycle before a bigger plan and a bigger opportunity presents itself in the next decade. And we kind of have some things that line up that it could potentially be. We don't know how that's going to play out, but I think just the debt-based system has been already going over, right? A debt-based system typically only lasts about 100 years. We've been over that already. So we've essentially been playing with a ticking time bomb, and we are very close to doing that. We have to also understand that it's not an overnight, that's it, and it's just going to be bricks, right? You have the biggest part of why it's a world currency is because people have trust in those countries. People don't have trust in China or in Russia, right? And so this is why the U.S. is still the front runner as of right now. Now that can change over time. But again, there needs to be something that is more dominant than what's currently out there. And this is why crypto has been developed, and why there's a lot of talk and a lot of excitement around crypto because of what it could potentially do. It essentially removes the middleman, which they don't want to happen. But this is also why they're trying to put a lot of regulation and kill a lot of on and off ramps to be able to control it. Because if they don't have the control, then the people don't need them, right? And governments want people to rely on them, right? And so this is where corruption and everything else happens. So again, just stating what is currently out there. So upcoming events, we do have monetary policy on the 1st, which is this week, and then we have core inflation not until next week. And then upcoming earnings, again, there's a lot of big earnings. There's a lot of industry leaders this week as well, especially on the value side. There's McDonald's and stuff as well. I haven't listed out all of them. These are ones I'm looking at. I'm looking at SoFi on Monday. I'm looking CAT and AMD on Tuesday, Wednesday, PayPal, Roku. Thursday is going to be a big day because of Apple, but you also have Palantir and you have Shop. So Thursday after close will be a big earnings statement, because if Apple fails, that could be the nail in the coffin once we start looking at the charts, because I'll show you exactly why. But again, Thursday is going to be a very, very big day, a very important day. And then as far as expected moves here, again, SPX is ticking up closer to 100. Tesla is ticking up, or kind of holding that 13, ultimately because it is starting to sell off. Tech is starting to show some weakness. Tesla, again, we're going into about the second week since earnings, so you can see another week of selling before a potential bounce in consolidation. It's already starting to consolidate a little bit, so Tesla really needs to break that critical level as of right now, which we'll go into. But if it does break that, that could be the dip to be buying. Again, not financial advice, but very well could be. BA is continuing to sell off pretty hardcore. And then you got JPM, which is holding at 4. So as far as key levels to watch, I talked about the 4,200 level. We had to hold that, and we broke it, right? We did bounce off it initially, and then we broke it this past week. Now we're testing that 4,100 level. I don't believe this to be It may a more stronger support. I believe this is more of a road bump. It's our speed bump, I should say. I think this is going to break again if we clear through 4100 and we start selling off here. We, in my opinion, are making a new lower low, and we are pricing in a recession at that point. At that point, I think we will. Will we get lower than 3,500? I don't know. Again, the lower we go, all is dependent on essentially what is currently going on, what news is being circulated around, right? Is there a lot of fear? Is it feeding off each other, right? If you have a cascading series of events that are occurring, you could drive so much fear that we could make new lows pretty simple. But again, it all just depends on how things happen. I mean, we could just come down to 38, bounce, and then start heading back up. But again, this is what I'm saying. Now, again, not financial advice. Expect the possibility of it to go. If we are averaging a 43% on a recession, talked about this before, we can still hit around that 3,200, that 3K mark on the SPX is a possibility. Not saying it will, but you have to understand that DCA is essentially a good alternative to be doing right now, because we don't know how far down it could go. But again, you're not whole accounting these different positions. So again, none of this financial advice, but again, this is the dip I've been talking about for a long time, and we've been fighting it for a long time. But now that we have officially maybe in a pause, the Fed's not going to tell you that till after the fact. This could be the official price in of a recession, which we could get a huge boom cycle, which I'm expecting a huge boom cycle, maybe the last boom cycle before we essentially come off of the dollar, which may take another decade after that. But you have to understand that essentially printer is on, and it's going to start printing, and we're going to get some big moves because now we have that 40% of the money supply. And we've seen what it's done over the last 2 years, and especially to people's opinions about how the market works and everything like that. So we're going to see that, even 4x after this in the boom cycle. But again, we have to price in that recession. And then after that point, then we can later on down the road, we'll talk about, what's going on with the currency and whatever. But right now, what we're focused on is we are focused on pricing in a recession and looking for that cut. So again, as long as we will find and see what happens this week. Again, this week is going to be a very pivotal week. If Apple feeds into this, this could get extremely nasty. But again, it's heavily dependent. And again, Apple will be that one last piece essentially to the pie that will essentially gauge where we're going next. And again, if we pause, which we are expecting to pause, it could lead to more worry and concern that things are getting worse, or essentially worse than what is essentially being broadcasted to everybody out there. So we definitely have to keep that in mind. Now let's take a look at Bitcoin. Now, Bitcoin had that pump like I talked about. It's been essentially fed about the spot ETF. Again, not long ago, we had this pump over here about an approval of ETF, which was a lie. So we pulled back, and then we had that listing, which had already been out there. That article was just resurfaced and pumped us up to 35K. Then we were getting a lot of news around here about Cathie Wood's ETF and everything else. But again, that 35K mark is going to be very important. If we get rejected, then it could be a huge, huge concern. Again, this thing could still go up to 40K and still pull back heavy. So just keep that in mind. But we will continue to watch and monitor the current situation and see what happens there. But Tesla. So Tesla this week, again, selling off heavy. This is a very key level here for Tesla, roughly around the 200, which has been holding pretty well thus far. But we will see. We got about, like I said, we've got about another week of selling for Tesla. If Tesla does break here, again, I do feel like we're going to be down around that 160 mark, which is essentially my next support area where I would like to be buying. And then from that, you pretty much got a big gap down to that 100 again. Again, very dependent on how news plays out over the next couple of weeks. Also have to understand that we are right around the corner from a government shutdown again in about another week or two. So that's one thing you definitely need to be keeping in mind, keeping a close eye to. If it does pop up, you want Tesla back over the 223. But again, you could get a gap fill here, this huge gap fill. But we've talked about several other gap fills back here that never got filled. So you can have that debate on which gap fill needs to be filled, but we'll see what happens there. But again, I think very critical lever for Tesla this week is going to be that 200 level. Then you got Palantir. Palantir needs again to hold this 14. It's got earnings this week. Could be a big earnings if it does go positive again on earnings. It could be maybe included in the SPX is the big hope for it. If it does, institutions will have to hold this on the books, so you could see a huge pump out of this. So again, closely monitoring this particular one. Again, it's been playing that range roughly between that $19 mark and again that $14 mark. So really kind of watching to see what happens with Palantir moving forward. But again, I do very much like Palantir, especially going forward. If there's any kind of global conflicts, helps a lot with that. With AI, big data in general, it helps with a lot of that stuff. So it covers a lot of those bases in general. Then you got BA. Again, it's been on a steady decline. Like I said, for a while, we haven't seen it steadily decline like this in a long time. So the fact it's starting to break supports pretty easily, which your next level is sitting at that 166 mark, and then you got it back down here, roughly at that 130 mark. So really watching and monitoring this. Again, this is I keep this on here for value play to kind of see where the value stocks are at. Again, slowly declining. All industries start declining. That's a very, very bad sign, which we're starting to see. So JPM, again, one of the strongest banks coming down. It's been gapping down essentially ever since it's talked about that $40 billion loss that nobody really wants to point out, other than they want to keep it siloed and just on the expectation and that they crush the expectations. So that should be all you go off of. But we've seen the decline, and now we're starting to see what's essentially not brought to the market. So and now it's starting to fill these gaps that I talked about for a while. So we're kind of looking at that 124 here. If it can't break back over the 142, which it actually has a solid daily body candle underneath that. So that was a clean break underneath. So watching that 126. And again, you got another gap here we need to fill. So potentially down to 102. Again, not saying it will, but we deal with possibilities, and there's a strong possibility could be going that low. Goldman Sachs, same thing. It's been breaking this support. It's massive consolidation. And this is what I talked about. I talked about this on the SPX last year. I talked about this on Bitcoin, the way Bitcoin is moving. Kind of seeing this move in Bitcoin right now, where you see a massive spike up. This could be liquidity. Something I've always talked about is a lot of times the institutions are very well. People have, that's why I like supply and demand so much, because essentially institutions are aware that people have their stops right outside of this zone. And so they get these liquidity spikes to get fills. And then you have this break back in, and it gets one last test, and then you have that move down. And that's what I'm kind of thinking could potentially happen on Bitcoin. So this is a great, again, example with Goldman Sachs and what could be potentially happening with Bitcoin. That's why that 35K mark is so crucial, because it could be just a big, huge liquidity spike to draw Bitcoin even further down, so that way institutions can start buying and consolidating before that spot ETF gets approved. So again, another great example of that. But if you made it this far, I do appreciate you. Don't want to make this too long. And with that being said, we've got a big week on deck. I'll try to do another current event, maybe around Apple this week in their earnings, and see where we go from there and how the market reacts to that. But aside from that, again, check me out at Hemi137. Drop a like and leave a comment in what you believe where the market could potentially be going over the next couple of weeks, what you're gathering from this past week, and we'll take it from there. So have a good one, and I'll see you guys on the next one.